What's up, my mind, your money business folks? It's me yet again with another video on today's stock market news. And as always, hopefully you're in the market and not trying to time the market because that is simply impossible to do. So let's get into it. What happened today? Headline says Dow, S&P 500, Nasdaq waiver as Trump EU trade deal kicks off huge week. So let's get into it. U.S. stocks wavered on Monday after the U.S. and European Union struck a trade pact, kicking off a packed week of big tech earnings, a Federal Reserve meeting, inflation data, the July jobs report, and President Trump's August 1 deadline to lock in key trade deals. So a lot is happening this week, folks. A lot is happening. And I'm expecting stocks to possibly go up. That's just my opinion. The S&P 500 fell 0.1%, while the tech-heavy Nasdaq Composite put on about 0.2%. After both indexes closed out Friday at fresh record highs, the Dow Jones Industrial Average slipped 0.3%. Oh man, I can't forget. A thought popped in my head. Okay, so the U.S. and EU have agreed to the outlines of a deal settling tariffs on Europe's goods at a baseline 15%. Will it be 15% for everyone? So that's compared with a 30% that was threatened. They settled at 15, which is a good thing. Trump called the pact the biggest of them all, while EU head Ursula von der Leyen said that 15% is not to be underestimated, but it is the best we could get. At the same time, hopes are rising for U.S.-China talks in Stockholm on Monday, which could reportedly extend the existing tariff truce by 3 months beyond its current August 12 deadline. Investors' eyes are now turning to a jam-packed week on Wall Street. Heavyweight earnings highlight the most intense stretch of the season, with more than 150 S&P 500 companies set to report. Whew. A lot's happening this week, people. Meta platforms and Microsoft lead off Wednesday, followed by Amazon and Apple on Thursday. So we got to be on the lookout for those reports, people, because it will affect the stock price. Beyond earnings, the Feds began its two-day policy meeting on Tuesday. Will they lower interest rates or not? I don't know. With an interest rate decision expected Wednesday, while the central bank is expected to keep rates at 4.25 to 4.5%. The watch is on for signs that policymakers are warming to a rate cut warming, WARMING, rate cut in September. So they're not expecting one now, but one in September. So like if one happens now, I can see stock prices going down because they weren't expecting it when it's a good thing. Either way, they're hoping for a rate cut, not now, but in September. So it all comes alongside Trump's general pressure on the central bank and Jerome Powell, the chair. So on the data front, inflation and labor will be the spotlight. The July reading of the Personal Consumption Expenditures Index, the Fed's preferred inflation gauge, is forecast to show a modest monthly and annual uptick on its release on Thursday. Also on deck, a flurry of jobs data, with Friday's crucial jobs report the highlight. Whew, that's a lot. So a lot is happening this week, people. A lot is happening. A lot is happening in the stock market as well. I mean, a lot. A lot of money is being made. A lot of money is being spent. A lot of money is just out there. So let's get into some stocks. Let's see what some stocks have done. So NVIDIA gained $3.25 today at an all-time high, or closing at its highest ever at $176.75. I remember when I was expecting this price around December of last year, and it didn't happen. I'll take it now. And I would take this $3. I am appreciative, and I am thankful for this $3.25 increase in Nvidia. Keep going up, because I hear they're expecting maybe another 30% gain on this stock by the end of the year, maybe going up, well, maybe not 30%, but maybe 20% compared to now. Like closing out at $200 or a little over $200 by December. If that's the case, that would be great. Anyway, my S&P 500 ETF, SPLG, closed at $74.93. Tesla gained $9.53 today, closing out at $325.59. Palantir lost 92 cents today, closing out at $157.88. Broadcom gained $4.12 today, closing out at $294.30. My information technology ETF, FTEC, gained $1.46 today, which is great. So that means that information technology funds did really well today. Either way, it closed out at $206.40. IVR lost 3 cents today, closing out at $7.67. Google lost 66 cents today, closing out at $193.42. Apple gained 17 cents today, closing out at $214.05. Meta gained $4.95 today, closing out at $717.63. And that is it, people. That is it. So I'm hoping that you're investing into the stock market, into real estate, into yourselves, doing something to better yourself, increase your income to take care of your family, have something to pass on to the generation after you, your kids, wealth, what have you. But before you can do any of that, invest or pass down anything, when it pertains to money, you need to ensure that you're on a budget. You need to create a budget. That's the only way that most people succeed. The company that you work for budgets. That's why they have accountants. So why aren't you budgeting? Start telling your money where to go, so you can stop trying to figure out where it all went before the end of the month even gets here. You have to create a budget, people. I created a budget in order to get out of the debt that I was in, and I only had one. It was just my mortgage. For some strange reason, I was always, I guess, being from the South, I thought writing checks were for rich people. So I don't think I've ever written a check. Then I guess my heads were just in the cloud. I never owned a credit card until I was, maybe 30. And then I remember my first credit card, I only had a $500 limit on my first credit card. So I just never got myself in a lot of debt. Yeah, just never did it. Either way, but you have to create a budget. And then get out of your debt, get out of the car loan debt, get out of the personal loan debt, get out of the student loan debt, get out of the credit card debt. You have to get out of all forms of debt, and you can do that by creating a budget. And you may have to increase the amount of money that you have coming in a month. You may have to get a part-time job. You may have to seek better employment to increase your pay. But either way, start paying off your debt, smallest to largest, right? So as soon as you pay off all of your debt, now also while you're paying off your debt, it is suggested, I follow the Dave Ramsey plan, that you stop all investments. It's only temporarily. I know, it's only temporarily. It may take a couple of years, but think about after 3 or 4 years of paying off all your debt, then you start investing again, all this money that you have freed up to where you can now invest even more than 15%. But it just depends on where you are, because once you get out of debt, you create 3 to 6 months of emergency expenses or An emergency fund, 3 to 6 months of living expenses is what you call your emergency fund. You create that because emergencies do happen. And then you start investing 15% of your income into your retirement. You set up your kids' college fund if you have kids. Now you have all this freed up money. If you have a mortgage, now you can start tackling your mortgage with all this free cash that you have. You can tackle your mortgage with more money on the principal of your mortgage, and then you can also invest more than 15% into your income. Into your retirement. If you don't have a mortgage, you can save up to 20% and then finance your home. Put 20% down and finance the home for 15 years, and then you may more than likely, because now you have all this free cash and all you have left is your mortgage as a bill. Well, it's not even a bill, it's just your mortgage. Let's just look at it like that. It's your bill, your mortgage. You may pay that mortgage off in 7 to 10 years instead of 15 years, saving yourself a lot of interest payments that the bank would ordinarily make, but because you're paying it off early, it doesn't happen. Because most people that finance their home for 30 years end up paying double the amount that they originally financed. So you say you paid $300,000 for that home in 30 years to include interest payments and principal. You probably have paid $590,000 for a $300,000, loan. But that's how banks make their money, through the interest payments. Because when you get your home, when you buy your first home, look at your amortization breakdown, and you will see majority of the mortgage payment that you're making each month is going towards interest, and only a few $100s is going towards the principal. So yeah. Anyway, hopefully you get my point. Yeah, I'm talking too much. But so this is what I need for you to do: like, comment, subscribe, share this video. Let me know what you think, if you think anything at all. Think, think. Disclaimer: I'm not a financial advisor, so please consult with a financial planner before you invest any of your hard-earned money if you're not comfortable doing it on your own. So yeah, I'm just a little too high strung this morning. I'm drinking tea and not coffee, so yeah. All right, so you guys have a blessed day and continue to do great things. Peace.